Good afternoon. Welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Kelvin Wong, market strategist at CMC Markets. Kelvin, good to be in on the Thursday afternoon.
Hey, hi, Brian.
Yeah, enjoyed your holiday yesterday?
Well, not too bad, but except that we can't do much because in Singapore we are still in a kind of a semi-lockdown mode here.
All right, yeah, but at the end of the day, a little bit of a break for everyone. But before I get your insights, let's take a look at how markets in the region are performing. We've got the close to home. We start with the SGX, which is at 3,156.45. It's up 0.33%. Bursa Malaysia is at 1,579.76. It's up 0.12%. But across the region, the markets are pretty mixed. Nikkei is down 0.54% at 28,488.92. The Shanghai Composite is at 3,599.81. It's up 0.18%. The Hang Seng is at 29,078.02. It's down 0.3%. The ASX 200 is at 7,109.4. It's up 0.24%. Rounding up the numbers, we've got the Kospi, which is at 3,157.97. It's down 0.33%. Kelvin, what's your view on the mixed performance across markets today?
Yep. So what I would say that is that generally it's a kind of a mixed bag. So precisely, there are actually two opposition factors that actually, in the very short term, that's actually having the impact on our regional market right now. So maybe let's focus on the positive one first, the positive factors. So what we could see over here is that in the last two sessions, the renminbi, the offshore Chinese yuan, has been strengthening pretty significantly. So we're taking a look at account of the dollar CNH exchange rate. So it has broken down below a 6.4 major support level for the last two consecutive sessions. So in fact, this is actually very positive for ASEAN stock market as a whole.
Why is that?
Because if you look at a kind of a correlation, a kind of a correlation from across about close to about 10, 20 years ago, every time we start to see a significant strengthening of the renminbi, which is the offshore yuan, it actually lead to a kind of a outperformance on the ASEAN ex-Japan stock market. So let's take a look at the recent performance. It has really started to be shown on our neighbors. So let's take a look at the Hong Kong market, which is related to China. The Hang Seng Index, right, in fact, has rallied close to about 5% from the low of 14th of May low. So if you take into account of the similar May low of the SPX 500, SPX 500 only rallied by close to about 3%. So you can see that the kind of outperformance that's coming to play. So what's more significant is the Hang Seng Tech Index, which is a basket of major China big tech stocks, consists of it. It rallied by 8% from the May low.
Okay.
So you can see this kind of outperformance has really started to come into the ASEAN stock market.
But Kelvin, also the index for tech stocks also rallied. You say 8%, but that's also because of a sharp correction due to the crackdown of the tech sector. So yes, that is mitigating factor in terms of the reason for that rise.
Yeah, precisely as well. So what we could see that number one, the China big tech stocks right now has offered a better valuation compared to since the start of this year. Yeah, so that definitely is kind of one of the compelling factors to actually pull in potential, we call it deep buyers into this particular team play or this particular China big tech play. Yeah. So on the other hand, let's discuss more about the negative or offsetting factor that actually kind of negate this strengthening Chinese yuan effect, or the effect from overnight in the U.S. administration. So it seems to us that right now is that geopolitical tension between these two countries, U.S. and China, seems to be coming back into play, because since the start of the year, or in fact after the new administration took over, there's some talk that's saying that Biden administration will be less hawkish compared to Trump. So as we know that Trump in the last 3 to 4 years started to push about this trade war agenda with China.
Yes.
But yeah, but right now, if you look at it, look at the situation in US, it doesn't seem to change at all, because in fact, those who are actually looking for a more dovish US administration with China should be leaving the state of denial. Why? Because you look at yesterday's development, President Biden, in fact, has asked the US intelligence agency to double down. The key thing is double down on their efforts to find out where is the origin of the COVID-19 virus. Where does it come from? Because if you look at the last 1 or 2 months, right, there are some experts saying conflicting reports. One saying from the lab from Wuhan, and the other one is come from animals. So it seems to me that the US administration doesn't buy that story. So it seems like they're trying to find some way, some evidence to pinpoint or give a bit of breathing space that, hey, that particular virus has strong possibility coming from the lab of Wuhan. So actually that doesn't bode well for China-US relationship as a whole.
And Kelvin, given that scenario, this sort of hawkish behavior towards China, what action should we be taking in our portfolios?
Okay, so if we look at our the kind of situation right now in our portfolio, right? Because if you look at it, especially for the Asia side of the story, value-weighted stock cyclicals has been outperforming very well since the start of the year. All right, strongly. So going into the second half of the year, right, I believe that given there's the risk of this ongoing hawkishness between US towards China, and in fact, on top of this redoubling down of these efforts ordered by or instructed by US Biden to US President Biden towards the US intelligence agency, even there's a top official in US top official that is kind of in charge of affairs in Asia, has started to spoke out as well today's early morning. He actually stated that right now the current way of engagement in China is no longer intact. It's more of a competition between US and China right now. So that actually has a very strong stark remark from him. You see. So he's actually telling us that, hey, going forward there will be further kind of a China-US tech war that is still in place, ongoing, and it might be harsher. All right. So for us, right now in Asia, especially, perhaps investors will actually start to look at a bit of defensive plays, such as utilities or consumer staples. Yeah.
Now, Kelvin, we had a very rich economic data week this week. But what's coming out on Friday that we should be watching out for?
Okay, so especially on Friday will be the very key number will be the US inflationary data. Why? Because as you know that the last couple of 2-3 weeks there has been this conflicting of debate among the investment community, say that, hey, whether inflation in US is it transactionary or if there is indeed heightened risk of inflation coming into play. So on this Friday, right, there'll be this key US data that the Fed tends to watch very closely is the core PCE index, which is kind of a similar to the CPI index, except that
it's the personal consumption expenditure index, right?
Yeah, so that's a bit strange that that's a Fed favorite. So why is it so? I mean that will be another round of debate for that. Okay, but one thing for sure is that because this time round the consensus forecast for the month of April, we're talking about year on year, because due to the very low base effect last year, driven by the pandemic, so they're looking for a 2.9% increase year on year. So this 2.9% increase, right, was never seen before in the last 10 years. So in fact, the last time this number 2.9% was only recorded in somewhere around July 1993. So can you imagine that amount of the huge amount of years that it takes to actually reach 2.9%.
All right.
But don't forget, but this could be the kind of a basing effect from last year as well. So let's say, for example, market now has a kind of a high ball of 2.9%. Any numbers that has come below 2.9%, let's say we're talking about 2.5 or 2.5%, it should be as a kind of comforting sign that for those inflationary hawks to actually tame down the inflationary hawks. Yeah.
Okay. All right. Kelvin, thank you very much for your insights.
Sure. Thank you so much, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Please check out our website at www.biztech.asia, as well as our Facebook and LinkedIn pages. Please like and subscribe our various pages. Thanks a lot for tuning in.